Well, it's Sunday afternoon. It's 6 o'clock my time. So let's have a quick time check and see what's going on in the rest of the world. So it's quarter to one in Tokyo. Uh, so quarter to 12 in New York and around 4 o'clock in London. So that's my time, 6 o'clock, 6 p.m. London, 4 p.m. New York, 11 and Tokyo 1. All right, so that's that. Now, a lot of people ask me why do I always just show my charts and my trading station on these videos? And the reason is that the charts really are your command and control center of trading. This is where it all happens. So I spend a lot of my trading time just looking at charts and deciding what to do next based on what I see right in front of me. It's very visual. It's very graphic. It's very beautiful actually to look at, and it gives me an idea for what's going on in the market. So as I said, it's Sunday afternoon, 6 o'clock my time. I know around about 5 hours time the Asian session will begin, and that's when the markets open. So I want to get prepared for that. So the first thing is I switch on my trading station, my charts, and I have a look at the charts. Now, I've got two charts. There are actually three we're going to deal with today. The first one is this one on the left. That's the euro. And if I have a look at it, I really don't know what to make of the euro at the moment. So I'm actually tempted just to leave it alone because it's not very clear. And we've got all sorts of problems going on in Europe. So are we going up? Are we going down? Okay, we're above the 200 period moving average. We're stuck between a downward trend line and an upward trend line, and possibly getting squeezed into this corner here, which would form a kind of a flag pattern, or a triangle rather. And often it's a continuation pattern. So if anything, I think the euro will probably be going up, but I don't know quite when, and I don't know how far into this corner we might get. In fact, we might just rally from where we are at the moment, or we could go down and break through this lower trend line. So I really don't know. There's nothing very clear. We're in between levels. We're not at the Bollinger Band. We're sort of halfway between the upper Bollinger Band and the 200 moving average. We're exactly halfway in terms of the stochastic. It's right in the middle, so it's not overbought or oversold. We're just underneath the downward trend line, but not near the upward trend line. So really, it's pretty inconclusive. And if you're ever in serious doubt, which I am, it's best just to leave it alone and wait for a better and more clear picture. So, and that will happen during the European session, which will be tomorrow morning my time. So I can leave that alone, not worry about it, have a good sleep, and forget about the euro. So let's move on to the pound. This is a bit more interesting. Now, over the last number of days, we've been talking. Oh, and by the way, before I carry on too far, if you've been watching my trades on YouTube and Twitter and my emails that I've sent out to members, you'll have noticed that we've had a really good week again. So we made some money on that move down, particularly this was the main move that we traded over here. And some of it was on the pound. Quite a lot of this money was on the pound. We took a short right at the top Bollinger Band there. And we got down to the lower, not the lower Bollinger Band, the 200 period moving average. And then we took a long trade at that 200 period moving average and took profit up here. So that move there down to from that top Bollinger down to the moving average, back up from the moving average, that's all we really managed to trade last week. There were a few bits and pieces in between here, but nothing really conclusive. A few small wins and a few small losses, nothing very exciting at all. But that's where we made the dough, right there. In those few hours, actually, just 1, 2, 3, 4 hours out of all of the hours in the week, let's say 40, 50, 60 hours, just those 4 hours made us the profit. So I think it was about 72 or 74 or 76 pips on the way down and about 40, 50 pips on the way up. So about 120, 100 somewhere. I'm not sure exactly where. I'll have to look at my trade report. which I'll actually show you at the end of the month, so you can have a look at these in more detail. I think it was around about 100, somewhere around about 150 pips, maybe just a little shy of that, but close to it. And then we went into this very quiet period. We haven't done anything since then. But let's have a look at what we've got. And this is really just very simple. We've obviously moved into an uptrend after that move, that bounce off the 200 MA, and another one off the 200 MA over there. I forgot this trade, actually. We also made money on this trade. That one there, this move up. Not as much. I think that was about 40 pips. And it was a 1.5 size position. Sorry, not 1.5, 1.5 lots, which is a 75% position. So not a full position, if you remember. So 75 times 5, 50 pips, so equivalent to roughly 33 pips or thereabouts. So not a lot, but something at least a profit. But let's have a look at what's happening today. I put some orders in for the pound, and as you'll see shortly on the Australian dollar as well. But here's the cup that we've been talking about for a number of days now. And here's the handle forming beautifully, as I hoped and expected that it would. So remember, a cup and handle pattern is a reversal pattern. Now, what are we reversing? Well, the move down, all this move down, all the way down here. There's a little rally. There's the cup right there. And the handle is what follows the cup. And it looks like the little ear on a mug or a cup. And then we expect the price to move above there and up. And my target would be this line here, or 100 pips or thereabouts. But, so how are we going to trade this? Well, I've got the Fibonacci in from the bottom to the top. We've moved down to the 50% fib twice. So we probably won't get as low as that. But I'm expecting at the start of the Asian and into the European session, another little retracement just to finish off this little handle or ear. So I'm thinking around about 1.3150 down to about this level over here, 3150, which is halfway this move here. All right, so I'm looking at this move from there to there. If I come back halfway, a retracement halfway, that takes me to 1.3150, 3150. So how do we trade this? Well, I might be asleep when this happens. So in preempting that, and I'm only taking this trade because it's a well-defined and fairly rare chart pattern, which you won't see very often, but it's a good one. It's normally a very good one. This is a beautiful example. If you ever want to see a good example of a cup and handle chart pattern, you won't see better than this, I promise you that. This is as classic as it gets, and I thought it was forming up to be that way, and it has. So, how do we trade it? Well, what I've done is I'm going to go down here, and you can see I've put one trade lot, $200,000. That's one standard lot. So that's my equity, which is over here. Perhaps I can just zoom in. That's my equity. Last week we made about, well, $10,000, about 10% on the account. Actually, it was a little bit more than a week, about a week and a couple of days. That's the result of all of those trades that we've just been talking about. But a $2,000 position on a $100,000 account is 2-to-1 leverage. So it's 200,000 divided by 100,000 gives you 2. So, and that's my normal standard trade position. So I'm feeling quite confident about this trade. So I've gone with a normal position, not more than a single trade. When I say a single, I mean a single normal sized position. If I wanted to go to 2-to-1 leverage, then 3-to-1, then I'd have $300,000. If I wanted 4-to-1, $400,000. 5-to-1 would be 500, and that's the maximum I ever go, and only under fairly rare circumstances. But this is a normal one, normal position size. And you can see I've put a buy limit in at that price, which I've just shown you on the chart at 31.50. I put a TP, take profit, at 32.50. That's 100 pips exactly. And I put a stop loss in at 31.10. That's a 40 pip stop loss. And I can illustrate that a little bit better if I go here. All right, so there you go. You can see it. That's the trade entry screen. So there's the entry price, 31.50. There's the position size, 200,000 at 31.50. Take profit at 32.50. It shows you it's 100 pips. That comes in automatically. So if I change this, if I go 32.40, that'll drop to 90 pips, as you can see there. I'm pointing at the screen as if you can see it, my finger pointing, but you can't unless I go kind of like that. Okay, that's a bit weird. Anyway, so whatever you change this to, I knew I wanted 100 pips, so I just put it at 100 pips. And then the stop loss at 31.10 shows you that that is a 40 pip stop loss. So you can see my risk reward ratio is about 2.5 to 1, which is perfect. So I'm risking 40 pips, targeting 100. So my target in terms of pips and percentage and how much I'm going to earn if I win compared to how much I'm going to lose if I lose is a ratio of 2.5 to 1. I try not to go less than around about 2 to 1, sometimes slightly less, and if it's even higher, it's better. So we don't need that because we're done. All right, so that's the trade. Now you can see I've got one in the Australian dollar to sell. So let's have a look at the Aussie dollar. So remember, why do we look at charts all the time? Well, as I said, this is the command and control center of your trading. You look at the charts, that's what we do. We look at charts, we take decisions based on what we see and what the indicators and price action and horizontal lines and trend lines, all of those sort of things. We have a quick look at that. This is as long, literally, this video has been going for 11 minutes. This is how long it takes me to decide on my strategy for the next at least 24 hours, and sometimes I look a little bit further ahead. So it's pretty quick. One of the reasons is because I only trade a couple of currencies, sometimes quite often only one. But I saw something on, so it would have been just the pound. I saw something in the Australian dollar, which I often look at, which I think you'll find interesting. But that's how long it takes. It's now been 12 minutes, and I've got an order in for the pound already. That's how long it took. All right. Now let's go and have a look at the Australian dollar and see what we can find out from that chart. So there we go. Now, first thing that you'll see on this chart is a very long move up without a break, without a retracement, without a hesitation. We saw one there on the way down from this, but this one's even longer. So the first thing I do when I look at that, I think, well, you know, we've been moving up for a long time. In fact, we started on the 15th. It's now the 20th of March. So since the 15th of March, we've been rising without any retracement, any pullback, any correction to this move up. That's the first thing I see, which makes me think sell rather than buy, because it's moved up too far for too long and it hasn't retraced. Second thing is we reached this resistance level now. It's kind of easier to see on the, let's just put horizontal line there. And you can see I'm cutting through the wicks, as I sometimes, and well, quite often do. Cutting through those wicks are there, and if we go across to where we are right now, you can see we're right at that resistance line. And so we've got a resistance line, we've got an overbought stochastic, we've got a trend that's carried on upwards for too long and too far, and we want to see a retracement. Now, if I go and have a look at the daily chart, it makes it slightly clearer. And there's the daily chart. Now, the first thing again I noticed from the daily chart is have a look at these three daily candles. Look at those. They've moved up 3 candles in a row. 3, what I term, and you'll see in the training courses and sometimes I mention this in the videos as well. These are called shaven head candles, which means basically that these 3 days, the price has moved up without any retracement whatsoever. We saw that on the hour chart. And that's pretty unusual. You might get 2, but 3 in a row, means that the market's due for a breather, or at least some form of correction, possibly just within tomorrow's candle, just maybe a slight move down and then up again. I don't know. We'll have an opportunity to move stops to break even and so on if we do get into this trade. So what is the trade? Let's go back to the hourly chart. So I want to sell the Aussie dollar. As I said, on the hourly chart, we're at that resistance level. We've moved up for too long, too quickly. We're at the top Bollinger Band. Stochastics overbought. We need a correction. There's some support levels beneath us, and I'm eyeing this 38% fib down here particularly. So, and then we've got this trend line. This trend line was actually a support line, but we've broken through it. After breaking through it properly, we're above it again. It might act as a support again, and you can see it's kind of close to this 38% fib. And that price is at 73.20. 73.20. So that's kind of, well, that's 100 pips away, because we're at 74.20 right now. So how do we trade this? Simply go here. I've already put the order in. Let's have a closer look. All right, I've got an order in to open at the market price. Actually, you know what? I'm just going to cancel this because I'm not sure. So it's an order for 200,000. Let's just see where we are at the moment. Okay, so this is how you put the order in. You go over here, click. We want a limit order to sell. We're going to put $200,000 in. And that's giving me 74.12. Okay. We're at 74.18 at the moment. That's fine. It'll trigger that one off. It's 6 pips below where we are at the moment. So actually that's pretty good, because it'll help us get into the market if it suddenly starts moving down. Take profit. I'm just going to put 100 pips. Just like that. And that takes us to 73.12. I said 73.20, but let's go with... Actually, you know what? I'm going to go 73.20. Only one reason for that, and that's 92 pips. The only one reason for that is because the market often moves towards 80s and 20s. I've explained it before. These are price magnet levels, 80s and 20s. Remember that. If you've got a choice between 73.12 and 73.20, I'd rather go for 20. And then the stop loss, well, I'm just, so I've got a 92 pip profit target. I'm just going to put a 40 pip stop loss in there. And that is at 74.50. 74.50. Let's have a look on the chart just to make sure we're happy with that. And yes, I'm happy with that. And the reason is because it's above this resistance level here. That's at 74.40. I think I could go with 74.55 actually. 74.50 is up here. Let's go for 74.55 just to give it a little bit more space. So let's just change this to 74.55. And that's 42 pips, 43 pips. I'm going to save that. So there we go. Oh, sherbet. Now what I've done is I've put 2 orders in on the Australian dollar, but that's no problem. I'm busy showing you, illustrating this. It doesn't matter. The market's not live, so we're not going to be forced into a trade that we don't want. I think this is the one we want, that one we've just put in, so we'll just simply cancel the one I had in earlier. We just want to cancel that and it'll disappear from the screen. There we go. So I've got 2 orders in, one to sell the Australian dollar, more or less at the market opening price, and one to buy the pound a little bit lower down. And if these do trigger, well, the Australian dollar now is actually a counter trend trade. We'll have to see what happens. I think we're going to be monitoring that pretty closely. These are both full-size positions, nothing more than that, but nothing less. And that's it. So all in all, that was 20 minutes. I know I'm forcing you to watch 20 minutes of me nattering on and blathering on. I'm going to put this back. Actually, I'm going to leave it on the Australian dollar. No, I'm not. I'm going to put it back to the pound. I'll leave that one on the pound. So we know what we're doing on the pound. We're waiting for the price to drop a bit, and then we're going to buy. And then I'm going to change this one to the Australian dollar. And for a change, we won't be trading the euro at all, at least to start with. So we'll switch that one to the Australian dollar. So this strategy is we're going to be selling there, aiming for a move down to here, 100 pips away down at the bottom. Nice move down, and then we'll probably be looking to buy. We might be able to get the Aussie on the way down and then back some more on the way back up again. Pound, we're looking to sell. See what happens on the pound. I don't know. No, sorry, we're not looking to sell. We're looking for it to move down. Let me delete that. Restart. On the Aussie, we're looking to sell for a move down here. Pound, we're looking to buy, but only once it's moved down about half of this little move up over here. And I've explained the reasons why. So if you've forgotten the reasons, go back, rewind the video and watch them there. All right, so that's it. So that literally took me 20 minutes to analyze the setups for 3 different currencies for the market opening in a few hours' time. And that'll guide my strategy for the next few days, unless these currencies go completely unexpectedly in the opposite direction. In other words, the Australian dollar keeps on rising and we get stopped out. Well, we'll have to relook at it completely then. And if the pound rises without retracing sufficiently for us to get in, then we're going to miss out on that one. But that's the risk you take. If you expect a retracement and it doesn't retrace, you don't get the chance to get in. I'll tell you what I'm going to do. I'm going to put on the pound, I'm going to put, we want to buy, so I'm going to buy actually at market price, but I'm going to buy half a position, 100,000. And I'm going to put the stop loss in, well, I'm going to put the stop loss in, let me figure that out, I don't want to bore you with it, but somewhere down there. I can afford an 80 pip stop loss on this if I want to, because I've taken a half size position. Remember, a full size position is 200,000, taken a half position on that. So that's an order, a limit order. A limit order you always use if you're, for example, waiting for the price to move one way and then trade the other way. And a stop order is if I wanted the price to move down to that 31.50 level and then carry on through it, then I'd use a stop order. You can Google the difference between a limit order and a stop order. It's pretty important to know that, actually. So limit order is when you want the price to move to a certain area, then you are going to get into the trade in the opposite direction. Stop order is a continuation trade. All right, so I hope you found that useful. I'm going to submit that order for the pound. So that's just a toe in the water, really, in case we don't retrace to this 31.50 level, which is where my main trade is. Hang on, I've done this wrong. I want to put a buy limit in on the pound. Let me just cancel that. Yeah, too much talking and not enough focusing. Right, so we want to buy the pound at market. Sometimes difficult to, so we want to buy the pound at market opening. Same as the Aussie dollar. We're wanting to sell it at market opening. So that's the one we're going to buy right now. But it's a half position just in case we're going to retrace. Then there's another order lower down to buy at 31.50, and the Aussie we're going to sell at market opening no matter what. And that's it. Well, have a great trading Asian session heading into Monday's European session, and I'll speak with you soon. I'm going to put this up, send out the email, and put it on YouTube, and put a link on Twitter for the YouTube channel for those who are following on Twitter. And if you're watching this, I encourage you to subscribe to this YouTube channel on which you're watching this video, and also go across to my Twitter feed, and you can get these alerts as they happen. I put quite a lot of them up there, and if you set up your Twitter correctly, you can receive your Twitter alert from me directly to your computer or your phone within a nanosecond of me taking the trade or sending out an alert or some sort of comment on the market. All right, I'll speak to you soon.